to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up, don't miss this week's Money Metals exclusive interview, this time with Charlie Garcia of R360 and a former advisor to 6 U.S. presidents. Charlie gives the backstory on the well-covered topic of Chinese export restrictions on silver and what it's going to mean for silver prices. Mike Meharry and Mr. Garcia also weigh in on supply and demand fundamentals in silver and how expanding needs for the white metal coming from electric vehicles, weapon and defense applications, and an explosion in data centers are making the structural deficit situation look even worse for the silver market. So be sure to stick around for a wonderfully enlightening conversation about all that and more, and how to make sense of it all as a precious metals investor, coming up after this week's market update. And if you enjoy this material, please do us a favor and like and subscribe to this podcast, wherever you consume this content. U.S. stock investors have been jittery in recent days due to new warnings about a possible bubble burst related to AI and also private credit markets. Swiss bank UBS recently published its worst-case scenario for defaults in the private credit sector, estimating that default rates could surge to 15% if AI triggers an aggressive disruption among corporate borrowers. For background, private credit firms are primarily non-bank lenders, such as private equity, asset managers, and other specialty funds. These institutions lend money directly to companies, providing alternative funding options for companies and individuals. When an economy becomes over-leveraged, there is generally some spark that triggers a meltdown. In the late 1990s, it was the dot-com bubble. In 2008, it was the real estate bubble. Today, we have an AI bubble. Some might question whether the AI sector constitutes a bubble. While it is debatable, there are some clear parallels to the dot-com era in the late 1990s. At the time, billions of dollars flowed into internet startups just because they were internet startups. This was exacerbated by artificially low interest rates that incentivized risky borrowing. That bubble eventually popped. It was inevitable because when you borrow billions without a viable business plan, you're likely to get into trouble. We're seeing a similar mania in AI today. According to an MIT study, U.S. businesses have invested between $35 and $40 billion into AI projects, with 95% failing to generate any measurable return on investment. UBS characterized AI disruption as a clear catalyst for a credit meltdown, and private lenders have significant exposure to potential problems in the AI sector. The private credit market makes up a small percentage of lending, but there is always the risk of contagion, as we saw during the 2008 financial crisis, and there are massive levels of debt. The upshot of all of this is that there seems to be big trouble brewing, and this will almost certainly lead to more volatility in markets, more uncertainty, and also likely more Fed rate cuts. Well, before we get to this week's interview, let's take a look at the trading action for the week in the metals. Gold is now up a little more than $100 or 2.2% to check in at $5,240 an ounce. Silver is soaring here late in the week and is up nearly $9 now, or 10.4% since last Friday's close, to trade at $94.16 an ounce as of this Friday late morning recording. As for the PGMs, platinum is experiencing similar success as silver. The industrial metal is up a little more than $200, or 9.3% on the week, to trade at $2,371 an ounce. And finally, palladium is up a more modest 1.8% to trade at $1,794. Well, now, for more on silver and a whole lot more, let's get right to this week's exclusive interview.
Greetings, I'm Mike Maharrey, and I'm joined today by Charlie Garcia. He is the founder of R360, which is an organization I'm going to let him tell you about as we go through the interview. But beyond that, Charlie has an impressive resume. He's a decorated veteran. He's served as an advisor to 6 presidents. He's a successful entrepreneur, and he writes a regular financial column on MarketWatch and publishes articles in other places. So, Charlie, thank you so much for joining me today. How are you?
Thank you for having me. I'm doing outstanding.
Great. Well, I'm excited to talk to you. You came to my attention through an article that you wrote, I believe it was published by MarketWatch, about China and efforts that they're making to kind of lock up the silver market. And I'll just let you kind of explain in your own words what they're doing and what the significance of that is.
Sure. So on January 1st, China had implemented a new export licensing regime, which basically controls all of the silver exports for the rest of the world. And, when 60 to 70% of globally traded refined silver supply requires Beijing's permission to leave the country, that is a big problem. And of course, when that happened, you had the CME raised requirements, on all the contracts, and they started manipulating everything as they normally do. But, unfortunately, precious metals really has never been controlled by normal supply and demand because of the huge paper markets and the manipulation that we all know of. But when all of a sudden you need silver for weapon system, for electric vehicles, for solar panels, for it becomes a strategic asset, which is also becoming the United States under Trump. Now we're finally seeing the manipulation end in certain respects. And I've always said that silver is the most undervalued asset on the planet. I've been accumulating it since the low 20s. And I'm a physical metal kind of guy. I don't trust the paper. And my kids have always made fun of me. And here I am, like going from Cambridge to Boulder, Colorado. And, I got to have a thing to carry all my silver. And my kids made so much fun of me, and my wife too, until all of a sudden it's like, oh my God, this silver thing actually has legs. So they're not laughing anymore.
Yeah, I think that's true of a lot of people out there in the world. I've heard a number of commentators, and I agree with this assessment, that what we're seeing right now, really, if you watch the silver market and this extreme volatility, the big price swings, we're really seeing this kind of battle playing out between the paper and the physical market. And would you agree with me that really, when you boil it all down, the fundamental issue with silver right now is there's just not enough metal? Would you agree with that assessment?
Well, there's been a structural deficit now for 5 consecutive years, and the cumulative drain since 2021 is approaching 800 million ounces, which is nearly a full year of global mine production is just kind of gone. And if you look at the industrial demand, represents about 60% of total silver consumption, up from about 50% a decade ago. So again, the biggest thing going on right now in the world is AI data centers. They need silver, EV, solar panel. People forget about the 5G infrastructure boom with phones. These aren't discretionary purchases. They're the backbone of the energy transition. And 70 to 80% of silver comes as a byproduct from copper, lead, zinc, and gold mining. And you can't just mine more silver because prices went up. You have to mine more of everything else first. And those decisions are driven completely different, economics. And if you look at what's happening in China, 216 gigawatts of solar capacity in 2023, 277 gigawatts in 2024. They're building EVs faster than they can ship them, and their industrial base inhales silver. But again, when you have the central banks or JP Morgan or whoever snapping their fingers in the middle of the night and creating more paper silver and shorting, they've already been hit with billions of dollars of fines for what they do in the gold and silver market. When platinum went, kind of finally was let loose, it went into, I don't know, $1,200, and silver should be in the 200s, and it will be there when this battle is finally won. And, central banks have always manipulated precious metals because it makes them look bad, that, it showcases how they're debasing the currency. And in my view, they're debasing it, if you look back 20 years, by about 7% a year. And if you're not making more than 7% on your money, I mean, your dollars, you're toast. And it's so fun. When my mom passed last July, I moved to Daytona to take care of her. Her parents, my grandmother, collected all these silver quarters and dollars from like 1965. And my sister went out and got them valued. And it's like, hey, this quarter from 1965 is now worth $16. Like, think about that. A quarter that was 90% silver is now worth $16. Well, the paper dollar from 1965 is worth like 10 cents today. I mean, and now my brothers and sisters are like, well, should we go sell it now because the price is up? So I'm not selling anything. When it gets to 200, maybe I'll do, I don't know, but why should you sell it? Nice thing about having physical, it's hard to sell, so it keeps those impulses away, and it's easier to accumulate for the long haul.
Yeah, that's a very good point. My wife's grandparents had a very similar thing. We were digging around in their attic about a year and a half ago, and came across just a little, like a burlap bag, and it was full of pre-1965 quarters, dimes, and even some half dollars. And as you say, that that little bag of quarters is worth a whole lot more than the face value of those quarters. And you make a really good point when you say that the currency debasement, when you figured around 7%, that sounds like a pretty good number to me. And I think we should call attention to folks that's far above the CPI that they keep trotting out, and maybe the CPI is not the best inflation measure out there. Would you agree with that?
Oh, of course, because when you create more dollars and you're printing more dollars means they're valued less. It's an inflationary asset, which is why I also own Bitcoin. I think, Bitcoin, and I run my own node, and I've owned Bitcoin for a long time. I think everybody should own Bitcoin, gold, and silver. They're not like this or the other, but Bitcoin is a deflationary asset because you can never print more. So when they're inflating assets, you want to hold hard assets. And the hardest assets in the world are precious metals and Bitcoin. And I tell people, look, Bitcoin's going to be 10 million a coin in 20 years. Who cares if it's up or down in the next year or the next month? I don't buy it for that. I've given it to my kids. I've given it to my grandkids. And I say, look, I tell my kids, when you're in your 40s and Bitcoin's 10 to 20 million a coin, you're going to be worth 50 million bucks. All you got to do is just hold on it and look at the power of compounding. It's been compounding 60% a year for 15 years. Now I've predicted it's going to compound at 30% over the next 20 years. But hell, Warren Buffett compounds 20% a year, and he's the best in the world. And I lost a bet with a friend of mine at Goldman about gold because, unfortunately, it was a 5-year bet, but it ended in at the end of 2024. If I would have had it ended at the end of 2025, then I would have won the bet easily.
Yeah, you and I think are very similar in our thought processes. I'm not thinking about, what's the price of gold going to be next week or even next year. I'm looking farther ahead. I'm trying to preserve my wealth in this environment, as you note, where our money is being devalued on purpose, I might add. I mean, this is the stated policy.
Oh yeah, it's part of the strategy that they want to have 2% inflation, even though it's higher. It's like you got a pickpocket that's robbing you, and they tell you, and they meet all the time to tell you how much they're stealing from you. And one thing is you and me, but people that are living paycheck to paycheck who are poor, and 20% of our our country lives in poverty, those are the ones that it affects the most, because they're creating a wealth effect. If you look at that 7% debasement and you put it against a chart of the money printing and the S&P 500, it's a perfect match. Perfect match. So, you're looking at your 401k, your stocks, it's everything, it's going up. But if you look at what it purchases, I love this thing with we're talking about my grandparents. There was the Motel 8. Well, back then for $8, you could spend the night at a Motel 8. Well, now it's like over $100. Well, if everything costs more and is going up at that percentage on a yearly basis, it's all a figment of people's imagination. They're barely keeping up. But if you have a stock portfolio, you have real estate or a home that you own, that's something, right? But if you are poor and you don't have those, that's what's creating all these problems, and why we have a socialist mayor in New York City, the financial capital of the world.
Yeah, absolutely. Here's a question for you that you might have a little better insight than some folks with your background in the military and having a pretty good knowledge of the defense world. I think it's pretty intuitive that silver is an important component in defense. We have computers, we have missiles, we have all of these electronics. But people I talk about, talk to folks at the Silver Institute and places like that, they will readily acknowledge that silver is an important part of the defense industry, but nobody can seem to wrap their heads around how much silver. I'm not going to ask you to give me a number, but is it as substantial as I would assume that it is, or am I overstating in my head how important silver is to world defense?
It is for weapon systems. It is for the AI systems. There's planes that have been deployed to the Middle East over the last week that have never been deployed in war before, and it has to do with jamming radar systems and in real time being able to do certain things. The reason that those B-2 bombers went all the way from Missouri to bomb in Iran, it's because we had certain systems that basically shut down all the radars. And in those systems, silver is a key component, which is why Trump and China have made silver part of like a strategic asset now, which it never was before. And it's not only defense, listen to what Elon Musk and others that need it for their AI, for their EV. And the biggest problem with the AI infrastructure is going to be not only silver, but other metals that are very important. And unfortunately, now China puts a chokehold on it, which is important because we can mess around with China with tariffs and other things, and they need soybeans for us, but we're going to need them for precious metals.
Yeah. We also need them to absorb our dollars, which I think is another issue that a lot of folks don't recognize. I mean, not just China, but the whole world. We create all this money.
I mean, they are selling. They've been selling treasuries on a net basis, and they have been on the verge for 2 years. I don't know exactly why they haven't done it yet. I thought they were going to do it last year. Is come out with their own currency backed by gold. Yeah.
I've seen murmurs about that as well, and also, of course, with the BRICS nations. So let me pivot a little bit here, and I want to talk a little bit about the Fed and Trump's appointment of Kevin Warsh. which kind of, I don't know that it was the only factor, but I think it did contribute to sparking the big sell-off we saw in gold and silver, because there's this perception that Kevin Warsh is relatively hawkish. He's an inflation, he's not going to let inflation run out of control. He wants to shrink the balance sheet. And of course, the first thing through my head is, why would Trump pick somebody who seems to be at odds with what he stated that he wants, which is a lower interest rate environment? And you wrote an article about it, and I'm curious what your impression of Kevin Warsh is, because on the surface, it doesn't make any sense.
Look, it was between the two Kevins, and I came out with an article an hour after the announcement, and why? So I had written two of them for MarketWatch, which was a pain in the butt, but they wanted two because, first it was Hassett, and then it went to Warsh. And the problem was that he needed somebody that could get confirmed quickly. And Warsh was the one that had the credibility to succeed, Jerome Powell. He's 55 years old. He has what people call a triple threat resume. So he served as an executive director at Morgan Stanley, he was a top economic advisor to George Bush and the administration. He was the youngest ever Fed governor from 2006 to 2011. And when the crisis hit in 2008, he was the primary Fed liaison to Wall Street and basically represented the central bank at the time at the G20. So come on, who in the Senate is going to argue against that resume? And he had that, and no one else that was in Trump's orbit had that, but it did surprise people because he's shifted. Warsh has historically been known as an inflation hawk, but now he argues the Fed should lower rates more aggressively. And intellectually, the way that he's coming at it is that he's contending, and his theory, and I actually agree with it, is that AI-driven productivity gains will keep inflation in check. So if you look at, GDP, a big part of it is productivity, which has been going down, 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 down. But now, productivity could be pushing, GDP past like 5% in the last quarter. We'll see when the numbers come out. But Warsh has been openly critical of Powell's Fed data-dependent approach. He opposes the current operational framework, which is centered on models that give forward guidance, proposing instead that the Fed should stop forecasting interest rate paths and return to more of a results-oriented model with a lot of discretionary power based on what actually happens. But he still has to go through Senate confirmation, which is going to be messy no matter what. We will see what happens. But analysts do expect rate cuts would still happen under Warsh. And they're expecting 2 cuts in 2026. They believe that's going to come closer to the end of the year. But we'll see. I mean, Trump just had a decision that came out against him at the Supreme Court to do with tariffs. And he spent a lot of time making appointments that he's now disappointed with. And the thing is, once you become Fed chair, the chances of you being fired are slim to none because of what it would do to the market and the perceived Fed independence. And I don't believe the Fed has been independent for 50 years. But nevertheless, the market, I think the reason it went down is like, oh, he's just saying what he's saying to make Trump happy, to get the appointment, but then he's going to be there for a long time. And who knows what he's going to do? Is he going to be like one of the Supreme Court appointments that once they get confirmed, are going to do what they believe is in their best interest, as opposed to following what the president wants them to do. But, the other thing about Warsh is he's very close to other people that have been around Wall Street for a very long time, like Stan Druckenmiller. And they talk all the time. He was in his family office. So I think and he's been influenced by Stan. So you also have to look at what Stan is thinking and believing, what he's doing in the marketplace. He's short long rates, he's long short rates, and he believes that no matter what the Fed is going to do, they're not going to be able to control the long rates because of all the printing, and nobody wants to have a budget. I mean, the debt is just spiraling out of control. And it doesn't matter if it's a Republican or a Democrat in office, it is spiraling out of control. Now, supposedly with stable coins and supposedly with AI and productivity, they're going to be able to get it down. We shall see.
Yeah, I think you make
I'm skeptical.
Yeah, I think you make a really good point that so often, we all have our theories and our models and all of those things, but a lot of times realities tend to drive things much more than our theories. And as you mentioned, I mean, there's certain realities. There's a $38 trillion debt. There's a spending problem that nobody seems interested in getting under control. That requires borrowing, which requires, as you mentioned with Druckenmiller, the long end of the interest rate scale is really hard to control. So I think you make a really good point. It will be very interesting to see how all of this plays out. So before we wrap up, I do wanted to give you an opportunity to just tell us a little bit about R360, because it sounds like a really interesting concept. And I know you're also doing some writing over on Substack, so you might want to tell folks about that as well.
Yeah, thanks, Michael. So R360 is a community. I read Atlas Shrugged, and if you read Atlas Shrugged, like, who is John Galt? Well, John Galt was a guy that looked around and he saw what he called the looters were not letting people be entrepreneurial, make money. And he wanted the entrepreneurial class to go on strike, let the wall fall apart, and then we'll build it up together again. I don't agree with that premise. What I believe is if we can aggregate 500 what I call superheroes in the US and abroad that have created a minimum of 100 million in wealth, and that they've demonstrated a generosity of spirit to use that entrepreneurial spirit and their wealth for the benefit of others, for the benefit of humanity. That's what we're looking for. And although we've been called by 3 organizations the most exclusive private members club in the world, because we have a membership committee that's denied 72 families, including 9 billionaires. And I tell people it's not about how much money you have. We have 18 people that didn't go to college. We have 12 that didn't graduate from high school. Half of the 12 are billionaires. So they're not pretentious. Many of the members are first-time wealth creators. They've been scarred by poverty early on in life, and something clicked that said, I will never be poor. And now that they've created this great wealth, they want to use it to create a legacy, have children that will carry on that legacy, and help others and use that capital in that way. I also started a Substack because, Market Watch is great, but I have an editor and I can only write 1,300 words. And I write I try to entertain. I write with satire and a lot of dark humor. I make fun of the Pope. I make fun of everybody. And, but when my mom was alive, I would read it to her, and if she had 2 or 3 laughs, and I knew it was good, but if I read it and she didn't laugh, then I had to go back to the drawing board. It's called Capital Mischief. And on Mondays, nobody publishes 5 days a week that I've seen. So on Monday, I publish something to do with the market. So today, I published on a stock that I've been writing about for 3 years. When I started, it was $1.20. Now it's $18. And that's Rolls-Royce. Think people think it's a car, but it's one of the biggest defense contractors in the world. Our submarines have their engines, our airplanes. They're building small nuclear reactors now. It's an amazing company, amazing story. Then on Wednesday, I read about geopolitics. So 2 weeks ago, I said within 30 days, there's going to be a kinetic war in Iran led by the United States and Israel. So I used to work for a 4-star general. I was an intelligence officer, and I'm basically taking open source and writing, like, this is what's happening, this is what's moving, this is what you should pay attention to. Then I have a podcast called Fortunate Fishes, and that comes on Friday. The fishes is because we believe wealth is more than money. It's not only financial capital, it's intellectual, social, human, emotional, and spiritual, which spells fishes. Jesus was a fisher of men, and we're looking for men and women that are willing to use their entrepreneurial spirit I interview them long form. It'll be a 2-hour interview. And then I have the Mischief Library, which is Saturday. So I have 5,000 books in my library, and I'll cover 3 books that if you read them, it's going to help you become successful and wealthy. And then on Sunday, I get so many comments, and I'm fighting with people all week in the comment section, that I have a Dear Charlie section, like a dear. It's not Dear Abby. It's like, it is like, people ask for advice in the markets. And today I published something. They asked me about silver. And, I started writing on Substack when silver was 49. And then when it was 79, and I had the former head of the Girl Scouts call me because she bought it at 49. She saw my Substack article, sold at 110, and did really well. And I'm not writing for people to make trading profits, because I'm really writing for people to make generational wealth. So I said I was going to publish 5 days a week, see what happens. I am a writer, and almost 4 months have gone by. I have 5,000 subscribers and growing quickly. And it's all free for probably another week, and then I'm going to turn on the paid. I have written about 110 posts, so I figured let me give you 3, 4, 5x value before I ask you to subscribe. I almost decided not to do it because I thought, if all these people subscribe, now I have a job. If somebody's paying me a subscription, I got to actually write for a year at least, or give their money back. But I enjoy it. I'm having fun. But it's hard to keep up with, a couple of my articles went viral, 400 comments. Like, how does one person answer 400 comments? And the nice thing is when you can't answer all the comments. So long days, my wife will be like, Charlie, come to bed. And I say, one more comment. So that's kind of what I've been up to. And it's capital mischief. And I write about mischief in the financial markets and in geopolitics.
Well, that's outstanding. And I can say just from what I've read from you, you are a fantastic writer, and it's coming from a writer. So I appreciate that. And I really like your worldview. I love what you're doing. And I hope that you have a great deal of success with that. I appreciate you taking a little bit of time out of your day. I know you're a busy man. You probably have something that you need to be writing right now. So I appreciate that you've spent some time with me.
Thank you, Michael.
And we'll definitely have to keep in touch and hopefully have you back on at some point as things come up that are worth discussing.
Anytime.
Enjoyed having Charlie Garcia on for the first time, and I trust you enjoyed that interview as I did. And that will do it for this week. Be sure to check back next Friday for our next weekly Market Wrap podcast. And to check out any of our audio programs, including our second podcast, the Money Metals Midweek Memo, just visit moneymetals.com/podcasts. Or find them wherever you listen to your favorite podcasts. And as a big help to us, we would ask that you please like, subscribe, download, and rate our podcasts. Doing so helps us extend the reach of this material. Until next time, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a wonderful weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.